In this video, we're going to look at several stocks that are listed in the NSE market. We're going to look at Family Bank, which is not yet listed, but their shareholders have approved for them to be listed in the NSE. We're also going to have a look at NCBA and Stanchart because there have been some market adjustments in terms of pricing due to the shocks that these stocks had. We're also going to have a look at KenGen because something interesting happened last week. KPLC and Williamson Tea together with Kapchorua Tea. Let's start with Family Bank. Now, Family Bank shareholders have approved for the bank to be listed in the NSE, and this is going to happen in 2026. Now, what's interesting about this listing is that it's going to be done through an introduction. This is not an IPO. An introduction is a type of listing that allows existing shareholders to sell their stocks publicly. No new shares are being issued. The company is not thinking about raising capital, rather liquidity. For example, now this does not apply to Family Bank. If you have a company, a private company, and you have early founders or you have employees who are given shares or just investors, an introduction allows them to sell these shares publicly, to have access to money, liquidity. So this is what is going to happen to Family Bank in that the listing is going to be done via an introduction. Now, this is different from what will happen to KPC, the Kenya Pipeline Company, which is also going to happen in 2026, which is good news for investors. For KPC, it's the government that is going to sell their shares, 65% of their stake at KPC, so that they can raise 100 billion. But for Family Bank, there's no capital that is being raised. So watch out for that. In terms of assets, they own around 193 billion in terms of assets. That is a valuation that was done for the first half of 2025. So that is as of June 2025. They have 1.305 billion shares. These shareholders are going to have a chance to sell these shares to you. Now let's have a look at NCBA. There has been a market adjustment. So let me just put everything into perspective. There was some information that Stanbic was to acquire NCBA. So the price for NCBA stock went up, shot up, because whenever a company is buying another company, now the company that is buying the other company usually pays a premium price. So the market reacted, and as of 22nd October 2025, you can see the price went to as high as 96.25. In fact, when you look at that day, the price went to as high as 100 shillings. So we have an investor who bought this share, this NCBA share at 100 shillings. So you can see that the peak price, that is the average price on 22nd October, got to 96.25 shillings. But something that is interesting is that the market has been adjusting. Let me just show you that. You can see that from 22nd October, the stock price started to go down. Initially, it was 69.5 shillings. Then the stock price went to as high as 96.25. But now the price of this stock has started to go down. You can see that it got to 89. But when you look at the price for that day, this graph shows you the price of that stock on 28th October. You can see that the lowest price was 80.25 shillings. And the highest was 88.75 shillings. So in short, the price of this stock is starting to go down. Now, my concern is for the investor who bought this stock at 96 shillings, the investor who bought this stock at 100 shillings, because we have winners and we might have losers. Not necessarily, we might have losers, depending on the price or depending on what the company that is going to buy this share is going to buy these shares at. So that's just something to look out for. And it just goes on to show you that the market always adjusts. There's always going to be a peak price, then the price will start adjusting to the market. It's the same case for the Stanchart stock, where we're starting to see the market correct itself. Earlier on, we had more than 600 employees, ex-employees of Stanchart, who were to receive 7 billion as compensation for pension. So the price of this stock went down because we had investors who lost confidence in this stock, and the price of this stock went to as low as to 84 shillings. There was even a time where this stock started to go for 280 shillings. 280 shillings. So 285, you can see that the line here, the graph here is almost flat, but we're starting to see the price of this stock go up from 280 to 289, then to 290, 295, and in fact, the lowest price for this stock, that is as of 28th October, was 300 shillings. And the highest price was 305 shillings. As of 29th October, that is today, the price of this stock was going for 310 shillings. So you can see that the price of this stock has started to go up. We have winners here, especially if you bought this share. You've always had an interest in owning this share and you bought it while the price was going for 280 to 85, you've won big. Now, what we can learn from these shocks in the market is that news affects the price of a stock, whether it's positive, whether it's negative. It has been positive news for NCBA. That's why the price of the stock went up. But now you're starting to see that it's going down. And it was negative news for Stanchart. The price of the stock went down. It went up, or it's starting to go up eventually. So you have to be careful when you're buying these stocks. You really have to be careful, especially for a buyout. Because if you bought the share when it was going for 100 shillings for NCBA, and now the price has started to go down, and it turns out that the price that is going to be paid as a premium is going to be lower than the 100 shillings that you bought that stock, then you've lost. But again, we still don't have such information yet in terms of what the price will be. But you really have to be careful. Look at the performance of that stock. Do you see that stock existing in the next 5 years, in the next 10 years? Because even if it's negative information, you can still remain with your stock. You don't have to sell it, or again, it's your choice. You have to assess the risk there. Last week, on October 23rd, the KenGen share was suspended from trading in the NSE market. And this is because there was online information. There was information that was being distributed online on the financial results for KenGen, where they are unofficial draft results. They were not yet official. So according to those results, KenGen posted a 54% rise in profit, that is to 10.48 billion, and that they had declared a record dividend. This information was not verified. That's why the stock was suspended. But later on, the stock was allowed to trade in the market after this information was verified. You can see that the price for this stock went up from 9.2 shillings, that is on 22nd October, to as high as 10 shillings. And this stock has been trading at 10 shillings. Nonetheless, this news affected the pricing of this share, as you can see. So again, you have to be careful where you're getting your information from. When a company, or when you see results, financial results being published online, make sure that you verify from the company's website so that you can get the correct information. KPLC announced a dividend payout of 0.8 shillings for every share that you own. This is the final dividend. So you have until 2nd December to own this stock so that you can earn this dividend. Earlier on in the year, they made an announcement of 0.2 shillings. So the total dividend payout is 1 shilling for every share that you own. Remember, the price of the stock as of today is around 13 shillings, 13.35. So when you're trying to assess whether a stock is a good dividend stock, you just divide the dividend payout, in this case, which is 1 shilling, divide by the current price for that stock. So that is 1 shilling divided by 13.3. That gives you 7.4%. That is the return on your investment in terms of cash flow. Now, for Williamson Tea and Kapchorua Tea, these two companies issued bonus shares, 1-to-1 ratio. So if you owned 100 shares, you received 100 more shares for these two companies. And when you look at how the market has reacted in terms of the pricing, the pricing of these shares has gone down So let me just show you. This is Williamson Tea. You can see that the price has been playing all along to 40 shillings, to 35 shillings. But once they made that announcement, the price of the stock went to as high as 334 shillings. There was even a day it was going for 345 shillings. So after they made this announcement, after the due date, you can see that the price of this share has gone down to as low as 193 shillings. In fact, the price that I saw was 174 shillings. That was like the lowest price for a certain day. Now it's trading at 193, and if you were to draw a line, like when you look at the graph laterally, laterally or vertically, you can see that the price just dropped from 240 shillings to around 190 something shillings. And this is expected of any market. Whenever a company does a bonus issue, the price of that stock usually goes down. In fact, it can even go to half the price. But in this case, it's more than half the price, because if it wasn't for this shock in the market, the price would be, the stock would be trading at around 240 there. So just going down to around 190 is, I would say it's a good price in that it didn't go that low, and that the market is also adjusting. You can see that the lowest price was 190 and the highest price was 193. So this is expected of the market. It's the same case for Kapchorua Tea. So let's have a look at that. You can see that the price was trading at around 320s there, 327, 326, and the price went to as high as 413. There was even a day it went to 440 there. So you can see that once the due date was over, the price of the stock went to as low as 234 shillings. Again, it has gone down from 413 to 215. This is 215 here. So again, like we said, the price of this stock can go to half the price of this stock, but in this case, it's still trading above the half price of this stock, So 250 there, and it was originally going for about 350 shillings. The reason why the pricing of a stock goes down, it's because there is a shares dilution. Think of it like a pizza. If you have a pizza and this pizza is divided into 4, so there are 4 slices. Since the size of this pizza won't change, and you go ahead and divide these slices so that you have 8 slices, and initially you had 4 slices, you can see that the proportion is now smaller, but the valuation is still the same. So that's why if the price was going for, let's say, 400, now that you have a smaller slice, the price changes. What do you think of these updates?